Yo, 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 what's up? Welcome to the stream. Hope everybody's having a fine morning this morning. Market here opens in about 40 minutes or so. A little bit tired this morning. Later to bed, but definitely earlier than bed than the nights that I was having last week. Anyways, if you're new here, welcome. If you're not new here and you're a veteran, welcome. I appreciate it. And as I get the stream rolling, I gotta get a few things up and running. By the way, I do run this stream daily except for on Sundays. And then also I give away a half an ounce of silver on Saturday night. So, if you're confused about how to win silver, collect the coins. What's up, Slash? Welcome, man. Just coming on to say hi, I know, and then probably back to bed or something. I'm horizontal. That means you're even or something. I don't. Is that what that means? I'm horizontal. Oh, man. I feel like in order to do a morning stream, I got to get up like an hour before I get on. It was about like 5 this morning, but restart session. Okay. And one more thing. I'm gonna eventually hop on to my spreadsheet to look or put in my excuse me real quick. My mouth has been like so dry last night. Put in my orders, or first of all put in the numbers on my Robinhood, and then from there, yo, I guess last night was double points too. What? That's crazy. I guess it kind of makes up for the shoot, what was I gonna say? I don't know. I guess it kind of makes up for I think it like stopped working on Saturday or something like that. So I just gotta make sure on Saturday that I do it earlier than like midnight or like close to midnight, so that way it works. Anyways, everything should be up and running. Coach, did you get any sleep? I'm still in bed. I mean, it's my bedtime. Yeah, I got like 5-6 hours of sleep. I went to bed at like eventually midnight. But I'll be good. I'll be good. Because tonight I get to bed early. So then I gotta stay up. I don't gotta stay up and run a stream. So I'm actually, even though the stream is early, I actually appreciate it quite a bit more, or I'm learning to appreciate it, because then I don't have like, it's like getting something out of the way in the morning, like something that you are going to do that day anyways, out early in the morning. So for me it works a lot better. So yeah. Anyways, double points, double the fun. Yes, exactly. I think this is the highest coin week that we've had. So yeah, I got some sleep. No, it's like if you're running the early stream, you're gonna just get done with the stream and come back to bed. And I'm like, touche. I gotta get rid of my coins though. And then I'll start distributing coins for the likes here in just a second. All right, cool. Slash is like, no one's taking my silver from me anymore. I lost once, but I'm not gonna lose again. He stands with 37,000, almost 38,000. So, good luck. So we're going to watch the opening bell. Yeah, it's not for another 30 minutes. What I'll probably do is just leave it up on my Robinhood account, because I think that'll work the best. As far as anything goes. What was I about to do? I think I gotta change it on here too. Sorry, Green Ghost, but you're no longer first place, man. As of today. Slash 2314. Yeah. So I got a comment on one of my videos. So for those guys, oh, let me go ahead and give a reward for that like, by the way, real quick. Yeah, I remember that's what I said I was going to do next. 500 coin. Yeah. Anyways, I'm going to go ahead and jump into the topic real quick. That way I can get that wrapped up before I move into putting in the numbers for Robinhood. And then from there, maybe I'll look at some companies that are down on their 52-week low or something like that. I doubt I will make it that far. 9:30 is way too late. Exactly, yeah. According to the futures, we open plus 3.37. Oh, okay, cool. Yeah, my Robinhood account has been doing pretty successful the last couple days. The problem is that the 1 week on Robinhood is like, I need to send them an email or something like that. It's been terrible. Like, it doesn't even show up on the actual phone. It just shows up a blank graph. So that's a little bit weird. But I'm gonna go ahead and turn down the volume just a tad. And so today, first of all, welcome to the stream. What I wanted to do today was first talk about, I got a question on one of my videos, actually one of my more popular videos. It's called like, how much should I invest into Robinhood or into Acorns or something like that. Anyways, a gentleman commented on there and was asking, or had said, you know, it says that the returns could potentially like happen or whatever like that. Like it says that the returns are not guaranteed, and I don't know specifically why the comment was there, because he does use Robinhood, so mad props to you for that. But I think it was used as like when I seen the comment, I seen like fear and like, oh well, then that means I shouldn't invest as much, or that means that I maybe shouldn't be as aggressive with my investments, or something along those lines. First of all, with Acorns, Acorns I feel like does a pretty good job at recommending a good portfolio for you if you do answer those questions that they ask truthfully. But as far as it goes with risk and the market, he had asked later on, he's like, so do I have the potential to lose my own money? And I was like, yeah, I mean, I think for a season, like if your focus is 30 years from now, which would be real long term, then a market that drops your account by 20% is not that big of a deal at all. I think that he was talking about like losing $30 or something like that. And unfortunately right now we are still kind of like in this correctional state. So as far as investing goes, there could be some wish-wash, some volatility and that kind of thing. I know when I invested in 2016 in Acorns, I really didn't have much of an issue with generating returns quickly because we were in a bull market for the most part. But I think my whole entire philosophy and whole like viewpoint with investing was to continue focusing on the long term and to make sure that those regular deposits hit, those roundups are getting withdrawn from my account on the regular, like, and it wasn't something that I was going to turn off because of how I felt that day, or if I was read that day, that I was going to continue to just repeat the same thing over and over and over and over again. So I guess my encouragement to you would be that yes, there are going to be market fluctuations. That does happen. But I think the more important thing is to keep your eyes on what the long term will look like 30 years from now. How often do we look at the short term and like, well, this is not going to really work out the short term? Because honestly, we love to seek short-term gratification in real life. We hate training for races, especially like running races, athletic events. Like, we hate the delayed gratification that comes with training, with anything that takes a while to succeed at. So I would say struggle and work and change your mindset, discipline yourself in order to make that happen. Anyways, guys, it's been a real. Thanks for watching. If you would like, feel free to join my live stream every weekday. It's either in the morning around the opening or at night around like 7, 8 o'clock. But it's been real. Coach Keith signing off. Thank you for watching. Peace, love. No, thank you for watching. I really appreciate it. Anyways, guys, cool. Well, I guess I got the little talking point out of the way. So, that was around 14 minutes. I think it was like a 10-minute talk. So, 14. But let's go ahead and hop on the actual computer screen. Until we experience something similar to 2008, it's hard to tell how we will feel. I think I could handle it because I've been in crypto since 2014, but that is to be seen. Exactly. No, and I think that you're right. That's like, it's one of those, I guess, catch-22s, because for me, like, I guess the earlier, like for me, like I'm like crossing my fingers kind of. like I kind of wish for a correction like that again, solely because I'll be able to buy, like Tim was saying, buy a lot of stocks a lot cheaper. Like, I mean, it would have been so nice. Even like I was thinking about it, I was like, it would have been so nice if someone would have told me, like, start investing your money in 2008. Like, even if you have a little bit of money, I didn't even know how or what investing was like. And I remember looking into it and like seeing all these accounts where you had to have like $2,000, $3,000 to open up a brokerage. And for me, like at that point, I was worried about buying like the latest computer, which was Apple, which I should have bought Apple stock back then with the money that I had bought the Apple computer with. And I'd be looking at it, I'd be sitting quite a bit more pretty than I am now. But you know, that stuff kind of does happen. But like I was saying, I wish that it would happen earlier on in my investing journey, so that way, yeah, like I would lose a lot of money, I guess, up front. But then once you go through that first correctional period, I think that your account's pretty much going to be a lot more stable. Like, you know, in 10 years from now, it would be nice to be like, well, yeah, we're going through another correction, but like my account's not really going to drop negative. Like, yeah, it's going to drop, but it's not going to go under. I'm not going to lose money. Lose money in the sense that I'm not going to lose my original investment anymore because of how much I've already earned through the market via dividends, via growth, and that kind of thing. So yeah, red days are definitely nice because you do get a buy shares cheaper. I did touch on that last night on the actual Stash Investors live stream, was talking about just solely buying the dip for buying the dip purposes only, and how that strategy might not be the most successful because you're just buying something solely based upon like price. Now, if you put thought into why it's actually priced at the price that it is, for instance, to be relatable, I guess, like, we'll say like a laptop's $500. Well, you walk into the Walmart and it's like, great, this computer that originally was priced $500 is now at $250. Like, does that mean it's a good buy? And I think that to some degree, yeah, it's half price of its original price, but as far as the value of that, could you buy that computer for $250, turn around and resell it for $250 or more? And if the answer is no, then like probably not as valuable as $250. However, if you were to buy it for like, say, like $50, and then could you turn around and sell it for $250? If the answer is yes, then you might, you know, have a good trade right there. Just jumping back onto their comments. Me too, coach. I wanted to always get into stocks, just didn't want to do because E-Trade cost and fees looked intimidating. Exactly, yeah. That's why I love like all these apps, because it makes it so easy to invest, especially fractionally, because I know for me, like, that's something that would have kept me out of the market, especially like when I was using Fidelity a few years back, and paying like $7.95 a trade or something like that, but I was only investing, I think, like still $20 a week or something like that. I didn't realize at the time, but that was literally eating up a lot of my profit. And then also I wasn't able to buy like that many shares or buy like, I guess, big companies. And at the time I had no clue what an ETF was. So I do like the fact that a lot of these apps have offered fractional share investing or really cheap fees or whatever it may be. My MacBook from 2008 still works and I use it nearly every day. I just upgraded it. It was around $900 then. Yeah, mine is I have a new computer now, but for the longest time I was pretty much using mine up until 2016, so I got a good 8 years out of it, and it just started to kind of get slow, I guess, like to the point where like it couldn't process stuff anymore. But yeah, absolutely loved it. Like those things were tough, tank, lasted forever. I think mine was like, I want to say like $1,300. It was the new silver edition when they first released it in 2008. And like, I don't know, it was great. I added an SSD and upgraded the RAM, changed the battery twice. If only I invested that money in Apple stock, it would be worth around $6,000. Truth plus dividends. Truth plus divs, man. So, I think that even for me, like I think that how often I was short-sighted back in the day. I went to a school called Grand Canyon University. They had their IPO in 2008. If you guys want, feel free to check them out. But I was telling a few of my friends, I was like, if I would have just took the money that I paid for school and bought stock in the company, I would be sitting on like $1 million right now instead of owing somebody the amount that I paid for my school with. It's just crazy, like crazy. I know. I'm gonna get it set up on the screen. I'll take a look at the actual stock. It's called LOPE, LOPE. Move this over here. Move that over here. Let me go ahead and transition. So this is actually LOPE, Grand Canyon University. We'll go ahead and look at the max. So this was where it was in the IPO 2008. November of 2008, $14.84 a share. Right now it's trading at $107 a share. So, yeah. Crazy. That's like... That's what I always tell people. Like, I'm like, I don't know if education is the best avenue for everybody, because for me, like, this is something that I'm extremely passionate about, and it's just interesting that I guess like no one really tells you about this stuff when you're young. So my hope is that I reach the younger guys. Why is Guerrero still the #1 subscriber when I've got him? Oh my gosh. Most recent YouTube subscriber. It's not him. Whatever. I don't know, that this stream labels thing is making me a little bit irritated. I don't understand it. Oh well, I'll figure it out eventually. My first week in M1 has been awesome. I still can't believe my returns so far. Yeah, man. It's been a good week for stocks. It really has been. That's just hands down the way that it worked. It's just been a good week. All right, let me get in here and put in my numbers. If I was swing trading, then, you know, I would have more numbers to put in, but I'm not. I think that I've been enjoying this non-swing trading aspect of my account. Like, it's been a lot. I feel like I've been just a more enjoyable person because I haven't worried about the stress of the market. However, it's also more exciting, which means that, like, I'm usually up early in the morning to watch the market open and all that kind of stuff. Where right now it's like market open, like I didn't wake up for that. Like, nah, like I just put my orders in the night before, and if it gets bought, it gets bought. If it doesn't that day, then it doesn't get bought. Like, there's nothing to it. So I can't wait to get that Roth set up, or that IRA set up with M1 today, and then get that account set up here probably in the next week. So super excited. Like, last night after looking on the desktop platform, I was like, wow, this is awesome. So last night Flip was talking about Hyperloop trains. That's the future, so why not invest? What's the investing game plan today, Coach? So probably what I'm thinking is that I'm probably end up putting some money into long-term holds, and that's pretty much it. I've been trying to buy these two for the past like week, and I'm waiting for them to drop 6 cents below their daily low again before I buy. So that's how I put my price in for like my long-term holds. It's just so that I guess I know that I'm getting it cheaper than yesterday's price or whatever. But it hasn't hit my limit order, so it's been kind of frustrating because those stocks have been just climbing, and it's like, are you kidding me? Like, I've really like yesterday, I believe that Smart and Final was down around $4 or something like that, and now it's at like $4.50, I want to say, or something. Not that I recommend buying Smart and Final. Right now, their operating income is in the negative this year. And so it's a little bit difficult. The only reason why I own them is because my brother works for them, and I think that it is, for me, it's a little bit more risky investment. But I guess because I'm closer to the store, I get a little bit of more inside information. But I think that they still have. So Smart and Final is a like grocery store, but they originally, when they first came into business, they're kind of like, I don't know if you guys know what Costco is, but they're kind of like a Costco without a membership. That was the way that they like branded themselves at the very beginning of them launching, and so they have a huge business base of customers. So a lot of businesses come buy their food products, all that kind of stuff from them. However, they have been recently trying to get more into the mainstream end consumer market, and out here specifically, we had a merger between Albertsons and Vons, which is two grocery stores out here that merged, and because there was so many of them out here, they had to shut down a lot of stores for basically monopoly reasons, and so that opened up space, opened up a market for other companies to fulfill. Well, there was a company that came down called, I think, Hagen's or something like that, and they failed miserably because they didn't have the infrastructure down here to be able to like distribute the food and that kind of stuff all together. So their prices were a lot higher than what normally would be. And so then once they kind of like went out of business, because what was happening is they were having to distribute basically all their products. They're originally based in Washington. They were having to distribute all their products from Washington all the way down here to San Diego, basically, and that was not a successful plan. So, but Smart and Final, I think, seen the space, and Smart and Final does have the infrastructure down here, the warehouses and that kind of stuff, because they are based out of LA, to distribute down here to San Diego without increasing their prices. And so I think that they took a stab at it. And yeah, that means that they're going to take on more debt because they're launching and taking on quite a bit more risk to make that happen. But I looked at it like, if they can last, because right now what they're doing is, I think, building relationships with customers. Especially from what I've seen, I think that they're just trying to get their name out there as a consumer name of like, hey, it's cool. Like, Smart and Final's not just a place that I go for my business needs to buy wholesale. Like, I can buy wholesale there if I want to, but I can also buy a retail product, which I think is a benefit that not many other companies offers, the ability to buy wholesale, but also buy the retail packages as well. For instance, you could buy like 10 pounds worth of oatmeal as far as like retail, or not retail goes, but as far as like wholesale goes, or you can buy like the old, like just like cylinder jar of Quaker Oats if that's what you're into. But yeah, that's kind of my thoughts on them. So I've been holding them pretty much. They were at like, they've been dropping like steep. So especially in the last couple of years, like I've been following, I think they were about like $17, I think, at one point. So like, I'm pretty sure that I'm way down on them, but I should have closed that position, but I never did. Dang, Groupon jumped up hardcore today. Groupon's up 13% pre-market. What the heck? I'll take it. That's a free stock for me right there. Hey, Snap's above 11 bucks. That's got to be worth something, right? I'm just looking for it to get above $12.06. Sorry for the yawn there. I think it depends on what you're looking for as far as growth goes, but cylinder of oats and just make it inside the cylinder, you know. Nah, what sounds really good, it's like a oatmeal cookie or something. I don't know why. Oh wow, so I can't actually buy any long-term holds today. See, I'm black on that now today, which is kind of a bummer, because like 2 days ago I could have bought like $6 worth of stocks, and I missed my buy price on both of those because they both ran up. So that's kind of frustrating, but I guess it does happen. Maybe what I'll do is throw some more into a bond, since I can allocate $40 into a bond. I think that, so for me, I guess I hold right now probably, I would say, close to 15, 20 different stocks, and that's not including ETFs. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10. So I guess I hold 10 to 15. I think for me is, I feel like it's a pretty good equilibrium. In this book, he really talks about picking up only, like, you only need 10 stocks, especially if they're good stocks. Like, you don't need anything more, which obviously the the more you hold, the more diversified you are. But I think that also comes with the absence of growth as well. So for me, I've kind of found the sweet spot where I'm at right now with my Robinhood portfolio. No, my Robinhood portfolio. So I've been really liking it. Let me go ahead and get into Robinhood real quick. That way I can catch the open. But man, I was hoping to be able to buy. It's like all slow. Oh, so right here now, remember last night I was like, it's not showing up. The show more or whatever it was. Now it is. Like, that's kind of weird. It's about time you get your stuff together, Robinhood. I guess it's not gonna let me exit this out. Cool, yo. Yeah, so it actually does show the top movers now. Yeah, I thought it showed the top 100 movers of the day, but I guess it just shows only the top 20. Do I think 20 stocks is too many? Nah, I don't. I don't think it's too many. I don't think it's too much. What up, Travis Masters, man? Welcome to the stream, man. Good to see you. Market opens in about 3 minutes. Maybe Robinhood will start a bank called Robinhood. Yeah, and I better make sure that I get that copyrighted. Stash paid some dividends. Be alone. That's gonna get bought. More park my cash for now on Stash. Tell them at 25%. I feel like such a astute investor. My FA only wants me to have a max of 12. By FA, are you meaning Ryan? The more stocks you buy, the closer you will get to matching the average market movement, unless you purposely pick penny stocks or something. Exactly, yeah. 100%. 100% truth. So we'll see what happens on the kickover. I've never been on Robinhood when it goes live, when the market goes live. Interesting. I only get on the desktop when it's pre-market or after-market. Whoa! Here we go, we're live. Let's see what's happening. I'm already positive 0.2%. Cool, I wish there was a way to full screen that. Gotta figure out what's moving, man, because something's moving fast right now. Something's moving fast. Whatever it is moving fast. HPT, good earnings it looks like. Up 1% today. IIPR is up 1.542. Gold, I guess, is doing, my gold stocks are doing decent. Some ETFs are up as well. I'm looking for Snap to see if they're jumping. Huh. Yeah, I think 10 to 20 is decent. I think that especially like if you're pairing that with some ETFs, I think it could be, I think that's pretty good, yeah. That's what I do for mine. I have 10 paired with ETFs. On my other accounts, obviously it's just ETFs. But on my M1 account that I'm going to have, it'll probably be no ETFs, just all, it'll probably be just all just hired Slash as my backup. There you go, man. Both of them have a lot of knowledge. I don't know how much you're going to pay him. Pay him in KCoin. I hope that I break 1,300 this week. That would be nice. It's possible too, so we'll see what exactly happens. But yeah, the 1 week chart doesn't actually work. Like whenever you click it, it just shows like this, even on both. So like it's so weird that it, like it doesn't like look at it, just disappeared. So I don't know what the heck's going on with their platform, but their 1 week is dudley. I gotta get it to pull back up so that way I can see the chart again. Look at it, disappeared. No. Alright, gotta be fast with clicking it. There we go. I got it. They got it back to the 1 day. Woohoo! Wow. I think Ryan was saying 12 because it's hard to keep up with that many companies. It definitely is. I mean, the more that you add, it's a little bit hard to keep up. But like, I think that for me, 10 is a sweet spot. We made it. We made it to the open, man. Woo! Another person was asking about, last night was asking about thoughts on, not last night, actually this morning. He asked me to do a value analysis on Walmart. I don't like doing value analysis on huge conglomerate companies because there's so much to take in consideration that it's like looking at Amazon and being like, what do they do? And it's like, well, they do shipping. Oh, they offer Amazon Alexas. They are a distribution network. All this kind of stuff, and it's like how can you say exactly what they do because they're just huge conglomerate company. I prefer to do values on the smaller companies because you don't really know like about them, and then also typically they do one thing and that's it. Yeah, so I guess like to do it like that. The nice thing about M1 is that, sorry about that yawn. The nice thing about M1 is that you can is set up different pies and separate pies and percentages of pies. So a pie on top of a pie. So for instance, say like just make a pie, a separate pie, or a little like subsect in that main pie, and it's called like companies that I like, and just allocate like whatever 10% of the entire portfolio or something like that. Just some of my thoughts on how I would do it if I was really trying to appease the financial advisors. Consider like for me personally, I would maybe do like 10% of my overall portfolio into a separate pie and call it like stocks that I like or something like that, and then just whatever, if you're like, oh, I like that stock, and then just throw it in there at like and then throw the other one in there, and just make sure that they're evenly diversified or percent splits, and then boom, you know, like it's not something to really worry about anymore after that. So that might be a thought also, so that you do get it, so that you're like, oh yeah, you know what, I like that stock, like I put it in there, and it's not like a huge amount of your portfolio, it's only like 10% or something around there. So really, yeah, 100%. I've been stuck between a rock and a hard place. You'll be fine, man. It's not about timing the market, it's about timing the market. And the more that you're changing your positions, buying and selling, and all that kind of stuff, the more that it'll affect your portfolio's returns as well. So, like there's stocks that I'll show you one stock specifically, or a few stocks actually, I guess. Here's SCLA. This is one of the ones that I've been investing into. I got an average cost per share of $25.48. A week ago was trading at $30, right? Right now it's $32. A month ago, it was trading at $24.87, right? At its lowest point, it was trading at $24.14. So I wish I would have been able to buy some more right there, but my portfolio obviously was not allowing me to, specifically on Robinhood, because I can't fractionally share invest. But over the year, I actually started buying. This is when I bought it right here. And I caught this run all the way up to there, and then I've been holding ever since. And then this has been where it's at. It jumped all the way up to like almost $40 a share. And then it dropped back down. So like this one, obviously, like I've been holding, just sitting here holding, but the only time I've like really been negative was a month ago. And for me, I was like, why close my position? Like nothing has really changed with the company, and I still sit 27.59% plus capturing dividends on that. There you go, 5,500 by the end of the year. I understand that, yeah, definitely. And I assume that you're just trying to get it to there as quick as possible. Why don't you just... I think that's what... Because you don't want to buy stocks that are going to... Why not just try to throw it into some ETFs then, or something like that, and then start adding single stocks slowly or something. I don't know. Just some thoughts. I guess I don't understand the concern. Besides just like picking bad stocks, or are you just trying to like get it all in there right now or as soon as possible? Just, yeah, asking for a friend. the DBC ETF that they put in the retirement pies has been doing very well lately, probably because of oil. Yeah, DBC. But I really like, so like this one is one of those ones that I've been holding for a long time. Up 25%. I almost was up 100%, or like 70% in January. So I should have took profit, but whatever. I'm like, why sell? I've only been in the stock for like 2 months. It's going to take $500 a month all the way till December. Yeah. Yeah, we got another like. Thank you. To max it out. Definitely. So I mean, to me it sounds like you're not picking any like stocks that are outside the S&P 500. Yeah, exactly. You have until April of next year to contribute to your 2018. But I think he wants to hit it before December so that next year he can focus on his 2019 Roth and so on and so forth. But as it goes for me, I would I don't know. You're picking from just in what I've been gathering, information I've been gathering, it seems like you're picking a lot of large market cap companies anyways. And I think that's what pretty much any FA would say, hey, that's probably the best idea. It's just to pick these huge companies, which that's basically, from my understanding, would be like picking a is that you're gonna get basically the same growth as the market. Yeah, no, it's April to April. Tax season. It's the taxes, man. But I think once you because I think you report it on your tax is so, because some degree I think you can write it off or whatever, deduct it or something. So I guess once you file, then maybe don't deposit into your 2017 Roth anymore or something like that, or 2018 or something. Yeah. But I think that, like, if you're just picking large companies, I think that that's what any FA would recommend, because that's like the safest bet. ETFs and large caps. Like, I don't think that anybody would disagree that if you want to keep your money safe and not as risky, then go with large caps and ETFs, which I'm not disagreeing. I'm just saying that you might be able to get better growth with smaller stocks. However, you're going to be also putting up with volatility, which is hard, not fun. 4 people watching on the stream. What's up, guys? Welcome. Thanks for joining in. I know it was like early morning market. I'm still starting to wake up. The lights are making my face look a lot younger, 100 times younger. You don't need to report Roth contributions. Yeah, see. That's my tax knowledge right there. That's why you get the accountant or the tax professional that tells you what you need to put in there and what you don't. I just bring all these papers usually, and it's like, here you go. Yeah, April to it's tax day to tax day basically. So not specifically April, tax day to tax day. It's weird. It feels weird though because it's like, oh, contribute to my 2017. It's 2018. So for that reason, it kind of feels a little bit weird. But I guess if you look at it like that, 1 year to 1 year, that's not too hard. Roth already get all the details. Yes. Thanks for sharing, Slash. Thanks for sharing that up in the stream. There you go. Everything you need to know. All in one spot. All on RothIRA.com. Check it. Check it up. Every time. So, it looks like. So my bond right now is $24. I'm gonna go get another bond real quick. Probably a bond ETF to put in there. I don't know if you can just do a search through PIMCO, active bond exchange. I'm not trying to do PIMCO. I feel like I hold them on too many why they can do a collection of ETFs. Nah, it's not gonna load, huh? Oh, it is gonna load. Let's see if there's any. Here's a bond one right here. CHB. Global X Super Dividend. I gotta look at this one. SD Trex of 100 global securities with high yields. Dividend yield 9.9 yield. What the heck? How's it done over the last like couple years? 1 year. Oh, that's not too bad. Looks like it's just doing 21.2% plus a 10% dividend year over year. Wow. I might put this one somewhere. What's the worst I gotta lose? Vanguard's BND. Deal. If I can afford it. Vanguard is always so expensive. 78 bucks. I'd be exposing a little bit more than I'd like to, but it's down right now. Coach, my stocks are Apple, Verizon, Alibaba, Take-Two, Activision, P&G, Kraft, BP, Lockheed Martin, WM, United Health, Sprague, and Spot. Yeah, so probably a risky one is Spotify. And I think Sprague is, I hope I say that right, but I think we looked at that yesterday. Yeah. I'm looking for something that's around. I want to add Domino's, Granger, 3M, and Amazon. I think those are all safe too. There's not really. Spot. I'm not gonna touch an IPO. Especially something like that. I think that Spotify was really highly anticipated. And so for that reason, it's a little bit difficult for me to like want to buy those ones. You could go with junk bonds for a high yield. JUNK. JNK. SPDR Bloomberg Barclays high yield bond ETF. Deal. $35. Done. I'm just gonna buy one share right now. My password? You want my password? Let's see if I can remember my password. It's gonna be like, no, it's not. That's not your password. I don't even know my own password. Use the password right there. Yeah, sure. That one. I love when it autofills for you. Cool. Done. Alright, I own one share now. 35.70. Hopefully that was a good lock-in price. Hopefully I didn't miss a dividend for the ex-dividend date. Feel pretty good about that. I don't know, bonds I don't really care that all too much for because it's only 5% of my overall portfolio. So, but I'm doing a $10 lose it or make it. It might dollar cost it later if I need to be. Okay, so you just did like a one-time investment in there and just let it sit. From my understanding, right? Let me get that updated in my holdings over here. JNK. Me no, tell her. 35.70. And just put that in here. And then put this plus and then convert this over to, what color is that? Okay, that color. Down here. Alright, cool. Hopefully it works out with that. I can still buy another $5 worth of bonds, but nothing too much. Gotta put another one of these guys right here. Anyways. Yeah, man. I think that changing the portfolio too many times is I think, and you'll find out as the longer that you stay in, what the sweet spot is for you as far as holdings, as far as stock holdings and that kind of thing. As a young investor, for me, like, everything always sounded good. So as somebody was talking about something, I was like, oh, I gotta pick that up. And that's not always the case. I think that it's more important for you to develop your own strategy on, first of all, how you pick stocks. Be it based upon market cap or whatever, however you want to go about doing that. You could use a strategy that I use, but I think that when you figure out how you're gonna, like, when you figure out your own strategy, it makes it so much easier. So that way, when someone's like, "Oh yeah, I've been buying Snapchat lately," you're like, "Oh yeah, that's good." Like, they're like, "Yeah, I think it's gonna go up," and you're like, "Okay, cool." Like, well, I'll take a look at it, and you're like, "Well, it doesn't fit into my strategy because this or that or whatever," and you're like, "Okay, cool. Well, let me know how Snap works." Like, and then they're gonna be like, "Oh yeah, man, I'm doing great. Like, you got to get on this." And you're like, "Nah, like I'm good." Like, they don't generate much operating income or at all, and their gross income profit is nil. So I think that they're gonna go under or whatever. And the other guy's like, "Well, no, man, I've been listening to this one guy with Snap, and he says it's going to the moon." And you're like, "Okay, cool." Doesn't mean I'm going to touch it because it doesn't fit into my strategy. So I think that that's an important thing, is to make sure that it fits into your overall strategy. Because if it doesn't, like, then my question is, like, why buy it? For instance, that bond that I just bought. My strategy for holding bonds is just to hold a bond ETF. I would like to be exposed eventually to 5 different bond ETFs that make up 5% of my portfolio. However, right now, because I only have like $1,300 in my Robinhood account, I'm not going to be able to get 5 ETFs for bonds. But the reason why I want ETFs in there is because I don't really feel comfortable or trust myself with picking bonds by themselves, in and of themselves. So sorry about the yawn, guys. Same thing with REITs. I mean, they'll be a little bit more risky because I'll actually pick singles. Single REITs, not just a ETF of REITs. Like, but with bonds, I think that that's probably the best way for me to go about it. I really like that dividend one that I seen, man. I don't know why, but I really liked it. I just don't know where I could put it. I could throw it into this ETF right here, but like, I wonder what it's trading at. 'Cause I could throw it up here in the dividends for now, but then I would have to transfer it eventually. I don't know if I want to do that. Earnings call. I'm not trying to listen to a live earnings call. Wow, Axion. Recent earnings. Yeah, Kronos. I know about Kronos. TripAdvisor, wow. No, no, no. Oh, that's what I was gonna do. It was not the movers, it was the popularity. So I think you go here and then you click on this one. No, not that. Oh man. 100 most popular. There we go. Whew, that's what I was gonna do. So based upon popularity for my, and then I was gonna do it with a 50% more analyst rating. And then I was gonna hold it like that. Facebook, a lot of people are saying it's a buy. But I was gonna hold it like that and then have it break down based upon percent. And then do it like once a month, just come in and adjust the core. So probably what I'll end up doing is, I haven't really put much thought into it, but it will probably be like this 75%, and then 25% will be like if a stock gets dropped off, then it will just go into the 25% leftover. Hopefully I can. That's my money maker. I'll be 33 this year. What percent in bonds should I do? Well, I think it. Yeah, exactly what Tim was saying. It depends on your aggressiveness. I think it more comes down to when you need that money, like you were saying. You wanted to buy a house or whatever, have enough money for a down payment on a house. And for that, I think that exposure to more to bonds would be better, because you want that money when you need that money. You know what I'm saying? I'm also in going 90-10. Yeah, I think it has to. I think it comes to the amount of fluctuation that you can take with your account. Obviously, if it's going to be long term, like 30 years or so. Yeah, exactly. 10-20%. I feel like it's pretty fair. Some people suggest like 25%, between 25 to 75% bonds. Obviously, that was probably back when bonds were a little bit better. Recently, they haven't been as good for building wealth. But I think that there's that we get too caught up in looking for the perfect sweet spot percent, and it's like, nah, just like pick one and then make adjustments if it's not working the best for you. For instance, like pick a target percent of like 10% or 20%. If it doesn't work out that year, if you're like, okay, I don't like this, or after like 2 months you're like, okay, well, I don't like this, like I think I need more, I don't like the volatility or whatever, then I need more, then just go more heavy into bonds. Like it's not like I set the plan, set it, forget it, never come back to it. Like you can make adjustments. That's the beauty of it. Yeah, so 10 years from now. I mean, you could even do like, like I was saying the other day, Betterment has an account where it's like sliding. So for instance, like the first year, because you got 10 years, so like first year 0% into bonds. Second year, 10% in the bonds. Third year, 20% in the bonds. Fourth year, 30% in the bonds. Fifth year, whatever, 40% in the bonds. Sixth year, 50%. Seventh year, 60%. And slide it all the way up until you get to the 10 year, and then there you go. That could potentially work out in your favor. I don't know as far as statistics and what a portfolio like that would look like, but just the thought. So that way, by the year 10, you do have all of your basically assets, cash protected. Because like about every 10 years, exactly. And I think that's what Warren Buffett, I think, really preaches also, is that like buying bonds is, it doesn't, in the long term, does not help you out really. Which is why I'm kind of concerned about running 25% on stash and park my cash. Which we'll see how it works this year. Next year I'll probably consider dropping it down to like 15-20%. But again, that's in a year from now, so it's not like concerning to me. I'm going to continue to execute my plan this year. Yeah. If you run simulations, yeah. If I'm not adding the stocks, letting my portfolio ride with what it has. Let it ride, man. Let it ride. Let it ride. Make the minor adjustments and then let it ride. But I think that 10-20% is pretty safe. Yeah. You're welcome, Travis. You have data defender. Is it probably my best stash ETF? Yeah, that's a pretty good one. My best are Defending America and Robots Rising. Defending America, I'm up 60%, 55% in the last year and a half. And Robots Rising up 44% in the last year and a half. But too bad I didn't invest more. I only invested like 20 bucks into them. Shysters, man. Shysted me. Yo, what up? Well, welcome to the stream. We got another viewer and then popped on, popped off. Yes, Tim, I have 1.5 shares of it. Nice. Nice, nice. Ride that. Ghost ride the whip. Value. Real quick, I have a quick question for you guys. How do you guys... So I was talking with my brother about live stream-ish stuff. What's up, Adrian the Great? I changed my Acorns to aggressive so I can get more growth in the long term since I'm 21. I think that's probably a good move there, Adrian. I'm 28, but this month was this year my plan was to go to the moderate account until 2019. So, which I think that, I mean, we'll see where I see the market going in 2019. We'll wait for a couple months, for like 6-7 months, but I assume that I'll be going aggressive here in the coming years for at least like 3-4 years, and then I'll switch back to a moderately aggressive, and then probably to the moderate in 10 years from now again or so. Just try to keep dollar cost average in them ETFs. Exactly, yes. Yes, exactly. 70-30 seems to be a high success rate for surviving a 4% withdrawal rate during hard times. Withdrawal from the bond portion, rebalance annually. Exactly. Adrian, yeah, man, and how long? I think that even like Acorns, the aggressive portfolio is not as risky as risky as they make it sound. Does that make sense? Like, it's not, there's no single stocks in there. So that definitely limits risk, and it's all ETFs. Like, I think that using dollar cost averaging, all that kind of stuff, I think in 10 years, 20 years, you'll be pretty happy. I mean, and it might be one of those things where you're like, oh yeah, we're going through a recession. Like, I don't even need to change my portfolio. Like, I'll be still good with the dividends and this and that and whatever. So I think the reason why I originally switched is because I was getting a lot of volatility on it, and for me, I had read somewhere about being exposed into bonds. I think like 20% or something like that, or your age being exposed to bonds or something. And I was like, oh yeah, that's a good idea. That's what I should do. And so I went and did it on my Acorns account because that was like one of the only accounts I had open at the time. And that's why I switched basically to the moderately aggressive, on top of like volatility and that kind of thing. But I know that it's definitely hurt my upside. Could be sitting with millions instead of, I could be sitting with billions instead of millions. Not yet. I will be though soon. Thanks for jumping on the stream, by the way, Adrian. I appreciate it, man. Groupon had a phenomenal earnings call. Look at it. Up 11% today. That's crazy. Good thing someone gave me this for free. I wanted to go look at this right here. The summary. I literally love the summary now, guys. I love the pie breakdown. I'm so happy that it's like this. Stocks and cash. Wow, I don't have as much cash as I used to have. That's because I got so much in Snap. Okay, this is probably Snap right here. Come here, Snap. Where are you at? Towards the bottom, maybe? Go to it. 11:09. I'm down $7.85. Oh, sorry for the yawn. VQN, VNQ. I think that's the yeah, the real estate ETF. Yeah, those ones are gonna move faster. The REITs, definitely. Mid-morning stretch. Yeah, for sure. Tim, have a good one, man. See you later. I know it's pretty heavily exposed into that REIT. I noticed that when I was originally holding, was that it does expose pretty heavily into real estate, which I mean, I think is, for me, I think is fine. At the time, like I said, I really didn't know exactly what I was doing when I opened up my Acorns account, or I didn't have as much knowledge as I do now, so that is different. I guess I wish that I would have stayed to some degree. But whatever. Ford is excruciating in the bed today. I don't even know what that means, but okay. Maybe it's like dropping. Oh my goodness, 1 point. Yeah, it could get as low as 10 maybe. 10-15. A lot of people like the dividend that they pay out, but Ford is focusing its investments where it gets the best return, which is why mostly exciting North America car segments is the right move in our opinion. Okay, thank you. Long-term profitability. It's kind of cool how they have like these summaries. I don't know. I'm really actually starting to get really interested in these ones. These guys right here. These guys. Not Ford specifically, but the actual desktop platform. Pooping the bed. Oh yeah, definitely. I could see that. I don't know. I don't really care for Ford. Automotive and financial services. Of course, man, and invest. That's what I was saying. All these companies have been around for a while. Like they've been investing. That's what makes them so powerful and so strong. Is that, and they don't rely on their products as much to sell anymore as they do rely on their investments to perform. We gotta look at percent changes. Oh, never mind this one right here. I'll still look at this one and I'm like, man, I can't believe I picked this up at $25. I'm almost up 7% on it. And I bought it a week ago, I think. I bought it, yeah, 2 weeks ago. I like that. I've been selling puts for Ford. Nice, man. Hope it's gonna work out for you. Probably has been. $11 strike price. Yeah. I think that's pretty good. I don't know much about options, so still don't. Kind of bugs me because I like to try to be good at everything. And I guess I just haven't had time to like really put a whole bunch of training education into bonds, or not bonds, options. I don't know why I get bonds and options mixed up because they're like totally not the same thing. I guess it's because it's different than equities, but it's like equities, but options and equities or something. I understand the concept though. And it's probably just one of those things that I just should go get my feet wet with. But I like where I'm at right now. So. Dang, I was up 2. Oh, dang, man. Why you guys gotta be hurting me like that? Why you guys gotta be doing me dirty like that? See, this is the. Oh, this is. Wait, this is the 1 week. Wow, it actually loaded up. Now the 1 month's not gonna load up. As long as I stay above 1089, I'll make money. Nice. I'm sure it'll drop. I'm sure it'll drop below, but I think it'll definitely bounce back up again. There's a lot of people that still like Ford. I don't know why. I don't really care for it. It's a thing of the past. Probably not, but I think they got to make some major changes. Building cars seems to be a lot more easier nowadays, and it's not like a proprietary process. I don't think as much. And as long as you have the money, you can get basically anybody to build you anything. So just some thoughts there. Anyways, guys, I'm going to go ahead and wrap it up right there. Leave it alone. Be on later. Tomorrow is Thursday. I think it'll be another morning stream. Did Disney had a good report? Oh, we could check. Apparently no. I mean, they beat. It looks like they beat their expectations. But maybe there was something in the report that investors didn't like, analysts didn't like, which is why there was the drop. It looks like that was like a what? A negative 2.3% drop. Just $2 though. So apparently not. But I mean, it's not too bad. Yeah. What looked like it, I mean, from what I'm gathering, it looks like it didn't have like a terrible earnings report. It wasn't no Snapchat report or something like that. But yeah, that's Disney for you. I'd be interested to do a value analysis on Disney. They're huge, but I would be interested in it. Anyways, thanks for hanging out with me, guys. Video coming out later tonight, and probably what I'll do is I'll keep the live stream down probably for about a few hours, and then I'll have it actually released around 12 o'clock today. I think that works a little bit better. That way you guys don't just hop off the stream and then get a notification again that I uploaded a video literally like an hour later. I think that's kind of redundant. So I'll probably hold off and then change the thumbnail and that kind of thing. And then put in there also what I talked about. But like I said, I do plan on pulling stuff from the stream. So at least one talking point a day. And I got my first talking point yesterday. And then I'll have, wow, gosh, I'm already got 3 extra videos. That's crazy. So those ones will probably, I'll probably dump them either like midday every single day or something. I don't know. I haven't really figured out when I'm going to release those, but those will continue to come out as well. So be on the lookout for that. And then also me and Jacob do a food review today. So those ones are always, for me, they're fun. It's something that I enjoy doing, and I know that Jacob enjoys it also. I don't get as many views on them when I post them, but it keeps us sane in this insane world of stocks, bonds, and options. So thanks for hanging out with me, guys. I appreciate it, and I will see you all tomorrow. Peace out.